with the world markets looking the way they are today, it's important to take stock of what the charts out there are showing and what the impact on charts in India could be and how are the Indian charts looking in the first place too. Somebody who looks at all of these, actually looks at a lot of charts, is JC Parrott. He's Chief Market Strategist at allstarcharts.com, joins us right now on the show. Remember, JC was a part of Traders Carnival, and you've seen his videos on our website, bloombergquint.com as well. JC, good having you. Thanks so much for joining in. What's your base case, JC, about what the next few days or weeks hold in store for the mother market, and what kind of impact could that have on emerging markets like India?
You know, the one thing that has remained constant, at least in the United States is concerned, is that, and most of the world, is that prices of the major indexes are still below all of last year's highs. So us as technicians, we look at that as overhead supply. And if there are more sellers than buyers up there, it's hard for the markets to break through. And we're not just seeing that in the United States. We've been seeing it in Canada, in London, in Europe, and all over. India is the one outlier that continues to make new all-time highs. It's been showing relative strength, not just relative to the United States, but relative to emerging markets as well. Really one of the strongest markets, if not the strongest major market in the world. So it's really interesting, you know, and not just that, but in the bank stocks in particular, you know, we look at Japanese banks, European banks, oh, they're the worst. You look at US banks and underperforming, right? And then you look at Nifty banks making all-time highs. So I certainly look at that as a leading indicator for sure. And the way that the asset managers allocate money is really with there's a behavioral correlation among emerging markets. So even though, like India, for example, with IT exposure and other areas compared to, say, Brazil, for example, whose economy couldn't be more different than India, when asset managers, particularly the biggest, are deciding to allocate money into emerging markets, there's a behavioral correlation where they invest in all of them together. So it's very, very interesting. The fact that India is outperforming, to me, I think is a leading indicator for emerging markets overall. And if the United States dollar can finally roll over, I think that can be the catalyst. But I think it's going to be US dollar dependent as far as emerging markets broader picture is concerned.
JC, good morning. Just want to get back to the point where you said that, the markets in the US have not really done much since last year. So January 2018, S&P 500 somewhere closer to 2,800. We're back to somewhere around those levels. So in the last 1.5 years, you've had times where the markets have moved up and come back down sharply. But at this point, they're absolutely at ground zero. What's the indication with regards to what you've been spotting on charts as to how the performance of these particular indices are going to affect the overall global market snapshot?
I think it's going to take time. That's really what it is. So we want to see how many stocks are above last year's highs. How many stock market indexes around the world are above last year's highs. How many sectors in India and how many sectors in America are above last year's highs. And the truth is, very few of them. In our universe, in terms of stocks, less than a third of the sectors have exceeded last year's highs. Closer to 20% of sectors, which is very little. When you look at the amount of stock market indexes around the world, developed markets and emerging markets, it's like less than 20% of the indexes are above. And if you price them in US dollars instead of local currency, it's more like 8%. So until we see an expansion in participation, in other words, more stocks breaking out above last year's highs, essentially indicating that the indexes will follow, until we see that, it's hard to have a lot of conviction on the long side. It continues to press for more cash, I think, until we ultimately resolve it, which, by the way, I think we do, for the record, and the fact that India continues to show so much relative strength. We look at India almost like when you put a big beach ball underwater, and then when it pops up, when the pressure is released, and it pops up. It's kind of like that. So we're looking at relative strength in that way in India and other areas as well, that I think that once the selling pressure has exhausted itself, maybe at some point this summer, we'll be looking back at this relative strength and be, that there was buying taking place ahead of time, suggesting India should outperform moving forward, certainly in the emerging market space.
What are the levels, JC, that you lay out for India, let's say over the next 3 months or the next 6 months, if you look at charts like that?
Yeah, looking at Nifty 50, a target near 12,800, I think makes a lot of sense. But I think that we're in a range. I mean, we can potentially drop down, to last year's highs and still be in an ongoing uptrend. So I think because of the pressure we're seeing globally, I think India Nifty is just in a range too, right? It failed to hold above former highs. So it's very clear that there's more digestion necessary for the demand to absorb overhead supply. And we're in a sideways range. Everybody's always like, well, JC, is it a bull market or is it a bear market? Is it going up or going down? There's a third option, and that's sideways. And that's, a trend identification as well. And the relative strength in Bank Nifty, sure, that can ease up for a while, but looking bigger picture, taking a step back, that relative strength in Bank Nifty absolutely remains in place. So I think at the very least, time.
So do you think that if we do manage to see an outperformance and the Nifty coming to levels of 12,800 that you're envisaging, it's going to be, the leadership is going to come in from the banks?
We've seen it. We've seen leadership in the banks, not just in India, but compared to other countries' bank sectors as well. European banks look terrible, like terrible. U.S. banks, we're seeing some rotation into some of the areas, but have, historically been underperforming for over a year, since early, almost 16 months or something like that. And Japanese banks, nothing to speak of there. And then Bank Nifty making all-time highs. So I find the relative strength there very, very curious. It doesn't necessarily mean we need to go buy all the bank stocks tomorrow, but when the selling pressure eases that we're seeing globally and the amount of overhead supply is absorbed finally, because it's been 16 months, it's a long time. So we can't be too far, but a few more months, it would be perfectly normal. And then when that selling pressure gives up, I think you'll see Nifty at the top of the mountain.
Okay. You look at crude, I presume, as well, JC. How are the charts looking there?
Yeah, it had a great run off those lows. A lot of our targets have been achieved. We're back to the former lows that we saw last year. So, that former support turning into resistance. So, I think range bound at best. I'd be more inclined to look for a mean reversion in the energy stocks. I know things like Reliance in India have been doing very well, big component in the energy space. In America, they have just been struggling. Energy companies, they've been the worst stocks on an absolute and relative basis. They're like the European banks of America. They're just terrible places. But I think we continue to see some mean reversion there while oil sort of consolidates. I think that's interesting. What's also interesting is that the S&P 500 and crude oil has been very highly correlated over the last couple of years. So I think the fact that oil is sort of in a messy situation right now, kind of range bound, I think also speaks to the fact that S&P 500 is range bound. So I think it makes perfect sense.